Hi there, this is Rob, and I've just got 2 minutes. So let's first take a look at Monday afternoon's odds sheet. As you can see, there was a fair amount of green showing up in the averages columns. This meant several of the index securities we track met the minimum criteria for a long overnight position. I trade ES, so that's the security I pay closest attention to. ES just missed meeting the minimum criteria. Its price action and internals numbers were both strong, but weak seasonality left the average profit factor just a hair below the necessary 1.3. I'll sometimes take a trade with numbers like those shown here, especially when the possible upside edge is confirmed by other indices, as it is in this case. But two things kept me from pulling the trigger. For one, the edge finder did not come up with strong supporting evidence. Not a big deal if the minimum criteria is already met, but if I'm going to be pushed over the edge to take a questionable trade, I like to have some additional compelling reason to do so. My second issue is that I like to utilize stops and targets with my futures trades. When seasonality is weak, I use a smaller target amount. In this case, that would have meant a 9.5 point stop and just 4.5 points of possible upside. That's okay if odds are squarely in my favor, but in a borderline situation like this, I prefer to have better risk reward. So I passed on a position. Let's take a quick look and see how it played out. After the strong sell-off yesterday, there was very little overnight movement. When the market opened this morning, futures were up one measly tick from yesterday's close, while SPY was down 1 cent. Basically a flat open. Looking at the daily chart, we can see yesterday's action created what's called an outside day, meaning it made a higher high and a lower low than the day before. I looked back at all other times that ES posted an outside day with a down close and then followed through the next day with another down close, but still above the 200-day moving average. You can see a few examples here on the chart already. Here's an outside day with a down close followed by another move down the next day. We see the same thing here. So let's look at the overnight results of setups like this since 2000. There have been 33 instances, 76% of which have gapped up the next day, and with gaps up outsizing gaps down on average, we see that the gross gains have been about 4.5 times the size of the gross losses. These are strong numbers suggesting an upside edge. Here's a quick look at the profit curve. This would appear to confirm the bullish inclination. I'll look at this study in more detail with subscribers in the trading room this afternoon. Thanks for listening, and rest easy.